right more often than being wrong, and there are many kind of ways to do that. So I'm just pretty much now trying to see it from this perspective, right? And obviously it has its ups and downs. Here I took a profit, so I don't even care that I placed this trade there. Now I'm just looking for a trend up. If there's a trend up, I'm buying. If there's a trend down that I'm in the money, it's fine. Let's take a look at other stocks there. And in here we see that Ripple, after gaining so much, is moving south. Ethereum is pretty much stable. It mimics Bitcoin a little bit less, but certainly looks a lot like Bitcoin. So if Ethereum is going down, Bitcoin is going down. If Bitcoin is going down, Ethereum is going down too. Then we'll go to Nasdaq Composite here, and we see that it's still moving upwards very heavily, and obviously cryptocurrency markets have absolutely no correlation with the stock market, so everything's just fine. As you can see here in the bottom, I'm in the money, so it looks like I managed to catch up with the trend that's moving south, exactly what I want. So I'm right here. And what do I want? Should I take the profit? No, I want to kind of catch the trend and maybe close it down when it hits approximately 100, or when I kind of start to believe that it's going to move up. So what's the strategy? It's not even a strategy. I just kind of have to look at the numbers, look at the chart, and try to determine if the chart is moving south or north. That's it. Euro USD, that's 1 minute. Let's take a look at 1 day. Euro is still gaining value, and what does that mean? Based on the past performance, which kind of says that Bitcoin, I mean that Euro USD was very much balanced in the way they move. So if Euro's going down, dollar's gonna go up. If Euro's going down, dollar's gonna go up. And what I mean is that they're gonna do this at a very similar fashion. So south, north, and it kind of gives you a feel that it's very similar. And it's not that much, not that perfect in numbers, perfect enough though. However, it's about time. So 2 years down, 6 years down, 3 years up, a few months down, like 2 years up, and then the fun starts right here. We have the recession, then we have like a month up, a month down, a year up, year down, a year up, a year down, 2 years up, another disaster, which is pretty much all slump, and Euro was really hit by that. And now what's happening? Euro is regaining ground. So what's happening here really is that Euro now is rising based on its fall here, so it's kind of equaling somewhere here. So where is the equilibrium in between Euro and dollar? Probably it's somewhere in range of Euro being at around so at around $1.50 to $1.20 or just a little bit less, to maybe $1. So what's gonna happen? I guess sooner or later euro is going to reach this point somewhere here, for that equilibrium that was here for the last decade, and it will certainly start to go down, which would be even strange if I'm kind of looking at this in this exact way. Now let's take a look what's happening in the market. It looks like it's blobbing up in here, so nothing special. Now it's Apple. Let's move on to 1 month, and we see that Apple is either starting to top out, or it still is rising continuously. And it was sitting at this price for quite a long time, in this kind of range of like 150 to 170 for quite a few months now. And then it's oil, and oil is steadily rising from the bottom of 26 here. If you could look at the distant past, we could see that oil was as low as $9. So that's not bad. That was cheap, and then it kind of hit $10, and after that it steadily rose to as much as 119. I have no idea why would that happen, but it seems that it seems like the world, the system, the stock market, somebody who is in control of the stock market was trying to either create a bubble for a crash or wanted to stop somebody from expanding. So what does that mean? The way I look at it is that countries tend to be controlled by the stock market because they have to follow the stock market prices, and somewhere in like from 2002 up to 2008, some countries were squeezed very much in relation to others in this oil sector. So what does that mean? What I wanted to say is that I think that countries get a specific amount of money from this group that controls the world, that controls the stock market. So all this, the way I look at it is the tax system is just fake. It's just like not there. It collects money from people, but it just never really tells the truth. So it's all lies, complete. What does that mean? I think that the organization, or the people, don't really know how to call it, the force that's in control of the world just simply allows the countries to have a specific budgets, and they have to kind of live on those budgets. So what happened here, what they did here, is that from like 1998 up to 2008, they were making poorer countries to develop a lot less in the sector that requires oil. And this pretty much means if you are a really cheap country, so to speak, poor country, and you need oil for development, which is pretty much like water, right? Everything, absolutely everything in the world has to be driven or transported using petrol or some kind of a fuel that's pretty much is derived from oil. And if you, for example, are getting minimum compared to larger countries, such as, for example, United States or rich European countries, then that poor country would be pretty much heavily squeezed by this rising oil price, and they would just be underdeveloped in these oil related sectors, because they would just be overpaying heavily. So why? Because look at that, you could just kind of create yourself massive supply depots that you could fill with oil at the price of 17, which probably nobody thought about, right, in 2001. Or you consistently buy oil and use it. You see this as a logistical matter, right? I'm just gonna keep as much oil as I need, and I'm just gonna buy more the next year to fill what I need, instead of stacking up oil for like 10 years ahead at a price of 10 times less. And then you just kind of pay more, and your budget is consistently being squeezed due to the fact that you have to pay a lot for oil. And the same goes for the businessmen in that country. So communism is not everywhere where the state buys everything, right? So the businessmen in, for example, democratic countries have to pay for oil, and the businessmen just pay more. In terms, they are increasing their prices on their products and services more, and in the end, people who already don't make much money, because that's how the system works, right? The people are getting paid a lot less in countries that are given a lot less money by some kind of a force out there, and they have to pay even more for the products and services in the countries that are being squeezed due to high oil prices. Then we have a crash, and it just kind of puts everybody on more equal ground, because the rich countries already bought all the oil that they need when it was even at 100 or more, 140, and in here the poorer countries got a chance to stack up and kind of make everything a little bit cheaper, much better. After that, it moved up a bit, stayed stable, but it was still quite expensive, and it moved down. So this is a period where everybody in the oil sector can lower their cost, be more competitive, and make everybody's lives just a little bit easier, due to the fact that things should as well end up being cheaper. However, as far as I know, when it comes to petrol prices, oil price itself should play an important role, but it isn't. Like, oil prices maybe determines the fuel price by maybe like 30% or so, not like 80%, right? It would make sense that if I bought something for $10 or $26, it would pretty much be the biggest factor when it comes to the product I'm going to make, but not in oil, because there are taxes and other costs that pretty much take up more than 50% of the fuel price calculation. So much cheaper oil does not help lower the price by, let's say, 50 cents. It would kind of be really beautiful if oil goes down by like 50% and the fuel goes down by 30%, the fuel cost, but it's not like that. In any case, it still lowers the cost of businesses and countries themselves. And that's that for this. Now we move on to our 1 minute, and it looks like the 1 minute right here is further blobbing up, so the direction right here is still not chosen. We can move on to coin marketcap.com and take a look. Now let's go to the very bottom. Now take a look at the market cap. As you can see, the market cap is lower than it normally is, and the prices are certainly lower, especially for Bitcoin. Ripple, and that's Bitcoin Cash, right here. And we can see that Bitcoin Cash had its highs, had its lows right here. So opportunities to buy it were consistent. And some of these highs were extreme, like 4,000 for something that was worth less than 300 not so long ago. And all in all, it's moving down just like all the other cryptocurrencies out there. In any case, now it's blobbing up. However, the direction is still quite uncertain, so I'm going to wait a little bit more and see if I can do something about it. All in all, in a few minutes it looks like it's gonna go up, but a big chart south like that could change everything into my direction. Let's not forget that it is blobbing up. It's like correcting itself continuously, and for as long as there's no continuous trend, so that's like a nice blobbing up that has a trend right here. It doesn't really move anywhere, but like that one extra candle moves down, and then the next three just kind of show that, yeah, this is certainly south. And when we look at all of them, it certainly was a trend down, but it's just not the trend that I'm looking for. I'm looking for something like that, something obvious, like right here and right here and right here and right here. So it's moving, and it's certainly moving. We can look at other ones. So now those Bitcoin like cryptocurrencies have been so different from the original one. So why they became either a lot more transparent or a lot more anonymous. So now everybody certainly has a choice and pick the cryptocurrency that they see as the one meant for them. So maybe some of them are afraid of hackings, are afraid of thieves, hackers, and extortion, money extortion. So they would prefer to invest money into a cryptocurrency that's so transparent that law enforcement could just quickly make sure that the thieves are being caught, and the system itself would just simply be able to, using a code and tools that were implemented into the cryptocurrency, to just send that Bitcoin back to you if you prove that it was stolen or somehow taken away from you by intimidation or force. Other people would kind of believe that they wish to have a cryptocurrency as anonymous as possible because they would wish to, for example, hide money there. So how that would work, for example, if a person is in a very cash business, right? So we're talking about, for example, a company that washes cars, right? That person doesn't really sell anything besides the water that's being used and the service of actually cleaning. So the taxman may not be able to easily determine how many cars were washed based on the water that was used in that car wash. So that person may think that he's making 100,000 a year from his, for example, 4 car wash. stores there. And he could as well fool the tax man to make him think that he is only making 70,000 and he's going to pay his taxes on 70,000 or just below that tax threshold, whatever it is in his country. So maybe on $50,000 per year, that person would be paying 30% tax. However, on 100,000, he would be paying 65% tax. Or, for example, he would be paying 50% on 100,000 income, and he would be paying 25% on 70.